Hello, everyone. Welcome to the fifth Learn Live stream. I'm your host for today, Anna, and today we're diving into a game changer for the crypto market, the recently approved spot Ethereum ETFs. Now, this session comes at a crucial time as just recently the SEC notably dropped all charges in its investigation into Ethereum, which not only bolsters Ethereum's market position, but also clears the path for broader acceptance and innovation. Definitely excited to talk about this more later. Now, this live stream is available on both the Bybit app and Bybit web, but as usual, for the best interactive experience, do join us on Bybit web where you can ask all of your burning questions. This is your chance to gain as many insights from our experts as possible live. Now, before I introduce them, if you're looking to reap some rewards, we do have an ongoing pop quiz that you can answer. You already know the drill. Just scroll down, answer the 5 questions, be one of the first 100 to do so, and you will be able to walk away with a share of the 75,000 BOME prize pool. All right. And if you would like to show your love for Bybit Learn, for the Ethereum Spot ETF live stream, and of course for our panelists, don't forget to spam that like button and share this live stream out with your crypto community. And yeah, now let's turn the spotlight to our panelists. All right, we have Marcus, the founder of 10x Research. Hey, Marcus,
Hello.
for joining us today. Could you please give us a short introduction?
Yeah, thanks for having me. So I'm Marcus. I'm the head of 10x Research. So we are a crypto research firm for hedge funds and individuals. We are probably the most frequently quoted crypto research firm. We have been through various cycles. We used to run crypto hedge funds before, used to run TradFi hedge funds as well. And we basically are very analytical. We send around a lot of data, a lot of market views. Everybody can sign up at 10xresearch.co. And happy to be here and happy to answer any questions, especially around Ethereum and the opportunities that lie ahead.
Thanks, Marcus. Definitely a familiar face on the screen. So glad that you are able to join us today. And we actually have Luke as well, but he's experiencing some technical difficulties, so he might not be able to make it. But if he will, we'll just introduce him later. All right, so yeah, we're excited to hear more about what you have to say about the current Ethereum spot ETF situation. So for those of you who are just tuning in, I was just sharing that if you're looking to reap some rewards, we do have an ongoing pop quiz that you can answer to claim a share of the 75,000 BOME prize pool. Now, without further ado, let's just jump right in. All right, so on May 23rd, 2024, the financial world marked a significant milestone with the approval of the Ethereum spot ETF. Today, we're going to dive into what it took to cross this regulatory finish line, the challenges encountered along the way, and the innovative strides made in securing this approval. Let's unpack the journey behind this pivotal event and discuss its transformative potential for Ethereum and the broader crypto market. Now, first up, Marcus, can you please explain to us what an Ethereum spot ETF is and why it's such a big deal for the average investor?
Well, it is a big deal because the average investor who has like a broker trading account, whether by stocks, whether by bonds, they can suddenly also add Ethereum ETFs just as a mix. And there have been various studies been done that, Bitcoin or Ethereum, they sort of like help the asset allocation mix. So instead of having gold in it, people can buy Bitcoin. Instead of having the Nasdaq in there, you can buy Ethereum, and so on. It just helps really broaden out the investor universe. I think we all know this, that some countries have really restricted the access to crypto assets. But of course, as long as it's traded on a regulated exchange, like for example the Nasdaq or anything similar, everybody can buy it now. And I think that's really a big deal. And as you said, there's actually 2 approval steps in place here. One was actually on May 20th, so actually 3-4 days ahead of the actual approval of these, these exchange requests, really. And it was really like on the Monday, on the May 20th, when the SEC asked these exchanges to refile their applications again, that people were thinking like, oh, something is happening here. So they're not really dragging it out. And of course, then 4 days later, on the Thursday, on the 23rd, as you said, these 19B4 filings were approved. And this is really where the exchanges are allowed to list these products. But of course, what is outstanding is really the S1 filing. So it's a small technicality, but now everybody expects it's just a matter of time, especially because, SEC Chair Gary Gensler has said last week, well, they're expecting sometime during the summer that really these S1 are approved. And once they approve these issuers like BlackRock and so on, or Bitwise, they can really list those ETFs immediately. And normally what you have is actually that the market sort of pre-positions for these events, front runs the flow, and this is usually when prices go up, and we're sort of in this environment right now.
Yep, definitely. Then could you please outline the main differences between purchasing shares in an Ethereum spot ETF and directly buying Ethereum?
So of course, when you buy directly Ethereum on an exchange, for example, like Bybit, some people leave it on the exchange, some people bring it to their own wallet. And for a lot of people, this is still very kind of cumbersome, especially, of course, because you have seen some hiccups on other exchanges during the last few years. But of course, when you have an ETF, it's all kind of taken care of. It's all in a regulated, custodian-friendly environment, really. So you really don't need to do much. And I think the key thing that we also have been pointing out in this bull market that's very different than the previous bull market is really this on-ramp from your fiat, from your normal USD or whatever currency you have into crypto. That is usually relatively difficult in this cycle, but last cycle it was super easy because we had all these different banks that have licenses, but these banks were sort of taken out. But of course now when you have a regulated product, the on-ramp is very easy because you can just send it to your broker, and there's usually no issue because it's usually the banks, and we have seen this literally for the last 10, 12 years really, where banks are usually restricting working together with crypto firms because of the regulatory impact and all these kind of issues that we had before. And it made it really difficult in an environment where the on-ramp was very difficult. And I think we have been actually in a difficult on-ramp environment. But of course, with an ETF, if it's sort of the same banks dealing with it, there's banks preventing the money flow into those products, and that's why people are actually very excited that this can be really a big deal. Plus, a lot of those TradFi flows are expected to be relatively passive, so they buy and leave it and don't really do too much with it, and that of course causes the scarcity of Ethereum or other products, and really just kind of drives up the price. And I think that's why everybody's so excited about, and that's really the difference between exchanges or in a regulated in a regulated environment where where these ETFs are going to operating in.
Yep, definitely. I think with the ETF, it's much easier for retail investors to actually learn more about crypto. It's also less daunting for them, especially for those who are more used to just trading stocks, right? Now, considering the hurdles, what were some of the technical and logistical challenges in setting up this ETF, and how were they overcome?
Well, I guess the main difficulty was really to decide if Ethereum is a security or a commodity. And of course, with Bitcoin, it was very clearly defined. And this was actually one of the reasons why Bitcoin has actually seen this massive rally in 2013 and then 14 and so on. Because, for example, large regulators, or you have, for example, in Hong Kong, the HKMA declared very early that actually Bitcoin is a commodity, so it doesn't really need to be regulated. And what does it actually mean? It means, for example, if you look at the US, that you have the CFTC that regulates commodities, and you have the SEC that usually regulates securities. But the SEC is, much better funded. The SEC goes after a lot more, cases about, security issues. But the CFTC is they only have 1/4 of the capital really, to go after some illicit activities and so on. So people, of course, crypto people, of course, they say we don't need to be policed. We can do the policing ourselves. And of course, the big debate, the big question, and SEC Chair Gensler has sort of denied this, a year ago to answer if Ethereum is a security or not, because if it's a security, it falls under the SEC, and a lot of people have said, of course, the SEC wants to oversee it because it's a bigger market, because a lot of other crypto assets would fall under it. And of course, the regulation is a bit more cumbersome. It takes a long time. Versus now, with this lawsuit that really came out also, is that Ethereum might fall under the CFTC banner, really. And therefore, it would be a commodity, and therefore, it probably will be a little bit more loosely regulated. And especially because the CFTC has already approved years ago a future based on Ethereum. So it's sort of like a natural progression. I think it just all falls in place, that suddenly there's more like a hands-off regulation or regulation approach towards Ethereum. And of course, a lot of people are speculating other assets could be approved. I mean, it's probably a very long shot, but nevertheless, if the industry really gets this Ethereum ETF, I think then we see also more strategies where we can be we can be short Ethereum and long Bitcoin, or the other way around, or have a mix of it, and so on. We can cover like a really broad-based crypto market exposure, and I think that's really exciting.
Yeah, getting on the point where you mentioned the possibility for other cryptocurrencies to have similar financial products. There are industry experts that say it's possible that we could expect a Solana spot ETF next. What do you think about that?
Well, it's probably a long shot, to be honest, right? Also, when you look, for example, the Solana, yes, Solana can go up, can go up a lot, it can go down a lot, but really from the trading volumes, they're actually not that large, right? Of course, Solana, we have to see how it develops, and of course, it was at the epicenter of the whole meme coin craze really since last October. This is really when the altcoin really started. And it really started only in October. It took actually a long time for the market to really catch up to sort of like the third, fourth, fifth, sixth most important asset, right? Because the bull market story we saw last year was really all driven by, let's say, lower inflation that really helped Bitcoin to rally, really. And of course, Ethereum was dragged with it, but it took really like a long time. I think it's a long shot really for Solana, and we need to look at step by step, because we don't really have a Solana future yet listed on public regulated markets. So that's a little bit the difference that we're seeing. But nevertheless, I think this is really another win for the crypto industry, and it really seems whoever is going to be president in the US next year is going to be a bit more hands off towards crypto, and that's going to be benefit everybody in this industry.
Yeah, definitely. All right, we have a question from the audience. So this person's email starts with RON. So this person said, what makes the Ethereum ETF better than Bitcoin ETF? What do you think?
So I think when you look at historically, that the narrative around Bitcoin actually has changed over the years, over the cycles, right? It used to be more like a payment mechanism. When you think about what is the title of the white paper, a peer-to-peer protocol, really, in the sense, right? But when you look at what it's now kind of like more pushed as from BlackRock as sort of like digital gold. So it has a very different characteristics. And I think the main difference really, or the main change for Bitcoin itself came in 2017, when the block size was kept actually relatively small. So it's not really becoming like a peer-to-peer payment system. Rather, it's digital gold that becomes more like a scarcity value. And of course, Ethereum is a bit different, because Ethereum can really dive in or type in into the whole like network effect that DeFi brings along. It can really be part of the whole network of DeFi. So it's really a different value proposition. It's a little bit like it went a little bit under, I think, this cycle so far, compared to the last cycle, because the last cycle was all really about that DeFi is going to, replace and change TradFi, that everything is going to become instant settlement, that you don't need the middle and back office of banks, insurance companies, where sort of like 70% of all the people work. So not many people really work in the front office. Not everybody is a trader in a bank. It's more really that you have different use cases and different narratives. And I think that's why the Ethereum can be like a really different or interesting component. And my favorite example is this: if you would have bought Apple shares 20 years ago, you would have had no idea that the iPhone is going to come out, because back then people were still, typing SMS really cumbersome, in like very short words. And then, of course, 10, 12 years ago, everybody started to use all these apps that are really built, based around the iPhone initially. And of course, with the Mac Pro book and everything. But it's really like you would have had no idea how Apple really evolved over time. And I would argue, actually, you don't really know yet how crypto might evolve, because there has been so much venture capital going into the industry. A lot of the smart graduates going into this space. You just need like a few of them coming out with some really interesting applications, and that's really going to change everything. And then the whole narrative is going to change. And again, we look at the history of Bitcoin. The narrative has changed many times over time. It's just really getting exposure to really the sector, and this really allows you the difference really between Bitcoin, digital gold, and Ethereum, which is a lot broader with all the dApps and everything around it.
Right. Thanks for the very detailed explanation, Marcus. So, given the complexity of the process, do you think the market anticipated this approval, especially after the approval of Bitcoin spot ETFs? And you mentioned, it's like a two-step process, right? Where they reviewed on May 20th, or was it like a surprise? And do you think the approval was already priced into Ethereum's market behavior?
When you look how Ethereum actually evolved, this year, it's quite interesting, because we had like an Ethereum upgrade in March, and of course Ethereum really rallied very hard into the upgrade, but then it really fell down, quite a lot. It corrected, more than 30% really, and I think everybody thought of the SEC is just going to push this thing out indefinitely, and I think nobody really like expected this. And I think you see this, for example, how futures open interest declined quite dramatically. The funding rate also declined quite dramatically. But of course, then we had some fundraisers around former President Trump, who kind of is presenting them himself as sort of the crypto president, and at the same time the current President Biden seems to have not enough votes, that suddenly the Democrats are becoming a little more crypto friendly. So, some people are claiming there was a call from the White House to the SEC to just be a little bit more friendly. And then I think when on May 20th, we suddenly had the SEC going the SEC going back to the issuers and want the refiling of these 19B4 applications. That's really when the market became more bullish, because it was suddenly like, oh, something is happening here. And this is when, for example, open interest in perps in the industry went from 8 billion to 12 billion. So it's almost like 4 billion, almost 50% really was really put to work here. And I think that's when people are kind of like, oh, this is something is happening. And of course, then we heard like more and more how the Republicans raised something like, or how the crypto super PAC has raised almost like $150 million for the election. And we heard more from the Democrats being more crypto friendly. So I think it just all like kind of like ties in. And now, of course, the market is extremely convinced. And as I was saying earlier, that last week we heard already from SEC Chair Gensler that these Ethereum ETFs will be approved at the latest by the end of summer. End of summer means September. So sometime between July and September, we will have these ETFs. So it's just a matter of time. And I can elaborate about this, but historically, when there was an indication that a listed product, a regulated product, would be approved anytime soon, that the market ran really, really hard into these events. And we can look at the December 2017 Bitcoin futures ETF. We can look at the Coinbase IPO in April 2021. We can look at October 2021, when the Bitcoin ETFs based on futures were approved. And of course, we know in January this year, the market also ran really high up into of these ETFs. And so I think there's also like a narrative to be told that maybe the market is going to run up at least until these products are approved. And actually, the longer it is that they're approved, to maybe in September, whenever it is, the market is going to trade bullishly, because it's going to be very difficult to be negative into one of these events.
Definitely. All right. So before we move on to the next segment, let's just take a look at some of the questions that the audience has. So someone actually said fantastic content. So yeah, definitely insightful stuff from you, Marcus. So someone actually also asked, do layer twos and layer threes have a direct benefit after the approval of the Ethereum spot ETF?
I mean, I don't think they have a massive benefit. I think the one thing we have been periodically cautious, and it's sort of like every time we want to be less bullish, less aggressive, we can roll out the kind of the book about how much revenue Ethereum actually produces. And I think when you look at the last cycle, we had, of course, the DeFi summer, where every time you wanted to transact, you needed to have Ethereum. And of course, you needed to buy Ethereum, you needed to on-ramp into Ethereum, or needed to switch out of your BTC into Ethereum. So there was a lot of demand for it. And of course, that's kind of caused, and that kind of rally went until April 2021 when we had the first peak. But then we had another peak, which was in October 2021, November 2021, which was really driven by the NFT, minting craze. And I think here you also needed to have your ETH, exposure, and it's really that kind of what you needed. And I think that's why we had this big rally, and the big rally was associated really with an increase in gas fees. It was associated with an increase in revenue that on Ethereum was really generated. But this time it's not really, because a lot of the activity have moved on layer one, layer twos or layer threes, or have moved on to Solana in the case of the memes really. So I don't think the layer twos, layer threes are really going to benefit. But nevertheless, it's just sort of like it's broadened out the capital base. And again, if a company, if a startup, if a project has more funding, it can develop more things, and more things can come up, just like with the Apple phone over the last 20 years.
Yeah, definitely. All right. Just a quick little reminder to the audience, keep the questions coming in. If we don't select your question now, don't worry. We'll be answering questions throughout the session. And we also have a dedicated Q&A session at the end. So just fire away. And just another reminder to do the pop quiz, and you might be able to walk away with a share of the 75,000 BOME prize pool. And if you haven't already done so, please do share this live stream out with your community and spam that like button to let us know that you're really enjoying the content that we're putting out and you agree with what Marcus has been saying. And all right, let's just move on to explore, just further elaborate on the ripple effects of the Ethereum spot ETF's approval on, market dynamics and investor sentiment. So, since the approval and the SEC's clear stance, we've seen some interesting in Ethereum's price and trading volume, like you mentioned. So we saw it, Ethereum's price pop at 3.9K shortly after the approval. So what changes are you observing in terms of market depth and liquidity, and how are different investor segments reacting to these developments?
So we have seen that open interest for Bitcoin futures have increased from like around 8 billion to 12, 13 billion. So there was, of course, almost like a 50% increase in positioning. We have seen that initially the funding rate also moved up a lot. So I think it indicates that a lot of futures positioning is really occurring, not much really spot buying. And I think people, of course, want to front run this a little bit. But of course, over the last couple of days, it has come down a bit. We tend to go into this period where we also have a little bit of overhang over the last couple of days from Bitcoin ETF outflows. So over the last 7 trading days, we have seen almost $900 million of outflows from Bitcoin ETFs. And of course, this is why Bitcoin price has gone down. This is why also Ethereum price has gone down a little bit. But nevertheless, Ethereum is outperforming now, because we're hearing some other commentaries that, again, Ethereum might be classified more by the SEC more as a commodity and not as securities. This is definitely like a bullish factor. And of course, it has really like a narrative going for itself if we have this ETF. So I think we're seeing more dynamics on kind of on this side, that people kind of always, I think in crypto, want to always bet on the fastest horse. And the fastest horse with the catalyst is really now that we're getting this approval anytime soon, really, that really people trying to position for itself. There are still a few minor hurdles, as we have seen from the S1 filings need to be approved, but we're hearing more and more about it, how issuers are already getting commitment. Bitwise had already $100 million commitment, I think pretty much on day one for their ETF. And of course, when we look at that, Ethereum is around like 20% of the market cap, more or less, of Bitcoin. So if we assume that the Bitcoin ETFs have seen something like, let's say, $15 billion of inflow, so maybe we can assume Ethereum ETFs going to get around $3 billion of inflows. And some people argue that, for example, Grayscale, they have an Ethereum ETN that will be extremely likely converted then into an ETF, which is around a bit more than 10 billion USD. And while the Grayscale GBTC Bitcoin ETF has seen 4 billion, I think, or $5 billion of, actually more like half actually of the assets of outflow. So this would be around 4 to 5 billion of the Grayscale Ethereum ETN. But I think the difference here is that the discount to the net asset of this product is actually really small. It's just a little bit more over 1%. So everybody who wants to get out can get out now. So there's no need to actually see this massive sell flow from Grayscale that we saw in January and that dragged down Bitcoin prices. I think we can make an argument that because this time the NAV of this product trades pretty much to fair value. So if you don't really like this product, you can sell now, and you don't need to wait until the ETF is approved. And in that sense, we might not have this downside, the selling pressure, once the ETF is approved. So maybe the $3 billion of potentially inflows is going to be real and just going to help drive up the price then.
Mm-hmm. And how might the influx of new investors, influence market conditions for Ethereum? Or do you think it's, like you said, it's just going to be proportional based on like the market cap of Ethereum versus Bitcoin?
Well, I think it depends a little bit on the narrative, right? On the narrative that, for example, the ETF issuers are really able to tell, their investors. Of course, what we heard, from BlackRock especially, and the CEO of BlackRock, really, that Bitcoin is digital gold. I think this resonates, a lot with investors. But I think that's also like a little misconception, what we have seen earlier about these Bitcoin ETFs, that sort of like a lot of retail was apparently buying it. And I think, our analysis indicated that it's actually a lot of arbitrage hedge funds that are buying, Bitcoin ETFs, but the short side, when they're hedging or when they're selling the future against it to capture really the premium or to capture the funding rate, was not really reported. So the ETFs might not be just outright buying, not all, of course, but let's say 30-40% might be really because of arbitrage seeking hedge funds. And when you see how the funding rate of Ethereum tends to be actually higher than Bitcoin, you can actually argue that a lot of those hedge funds that are maybe have been buying Bitcoin earlier this year and selling the future against it to capture this funding rate might actually move over to Ethereum. So the flows can actually be a bit bigger because there is more juice in the funding rate, right? The funding rate for Bitcoin, let's say, trades maybe at 10% versus for Ethereum, it might trade at 15 to 20%. So there is actually more juice in it, and that's, I think, where we can see a lot more, disproportionately based on the market cap, higher inflows into Ethereum that actually is going to surprise a lot of people.
Mm-hmm. And do you think that with the approval of this Ethereum spot ETF, we could foresee a halo effect impacting other tokens?
Well, we have already seen, you asked the question, it's going to be Solana the next. And and I think, the SEC has classified, a few tokens that would actually are seen as commodities. And of course, here the only real question is if there's market demand, because if market demand is, then the issuers can easily issue more of these ETFs. So it really depends on if there's demand, but it really seems that from a regulatory perspective, getting the Bitcoin ETF approved, getting the Ethereum ETF approved, that really we can see a few more others, be it, for example, Litecoin, or be it, some of these, Bitcoin Cash, or some of the other. If there's demand, they could be launched, and we have to see. But I think the key thing is really that it just really broadens out the investor base. It broadens out sort of like the marketing budget, because ETF issuers normally have a really big marketing budget, and we have seen this already. In the US, there's a lot of, there's a big effort really to talk to all the asset managers, to get them excited, to help them understand about, the custodian relationship. I think other exchanges have been busy in this sense there, but I think we're going in the right direction, that this is naturally going to broaden out. And who knows, down the years. I mean, it looks very slow in hindsight, but I think when you look back to the last 12 months, a lot has happened, a lot has changed in the industry, and it's only for the better, really.
Yeah, we're hopefully continuing on this bull market. Yeah, we see that prices are a little down these days, but hopefully it will go back up again. And all right, let's just take a look at some of the questions once again from the audience before we move on to the next segment. So someone actually asked, does that mean that the government will have a position in Ethereum consensus?
No, I don't think so. But of course, we know that various governments around the world, have a stake in Bitcoin, right? We know, of course, the German government actually moved some of their tokens over the last couple of days, and I think they have something like 50,000 Bitcoins. So it's not like an insignificant number, really. We know the U.S. government has a lot of Bitcoins as well, so they have a stake in this. But I don't think it means that the governments have a stake really, or a position in ETH consensus. I don't think that's the case.
All right, thank you. And the next question would be, does that mean that big funds can also short or flat after?
I think what the question means is really, that I was saying earlier, that, some of the funds they can buy, of course, once it's approved, they can buy the Ethereum, spot ETF, and then they can short really the Ethereum CME futures against it. I mean, I traded the Ethereum future, a couple of years ago, myself quite actively, when I had, some sort of like a multi-asset portfolio and everything. So this can be done. There is liquidity there, and it's really like a funding rate or a premium that can be arbitraged. And I think that would be kind of like a natural safe harbor for people to make returns.
Thanks, Marcus. Yeah, keep the questions coming, guys. Thanks for all of your questions. And yeah, let's just move on to the next segment on strategic implications for traders and investors. Now, what factors should investors consider if they're thinking about adding, an Ethereum spot ETF to their investment portfolios?
Well, the easiest answer is always, look at the correlation, right? Look how it works, against your portfolio. And the kind of the chat groups, you can hear this already, last couple of days or couple of weeks, that some crypto traders are sort of like a little bit disappointed that shares like AI stocks like Nvidia is up 170% versus crypto is lagging a little bit. But Bitcoin is up 54%, similar. Ethereum is also up a bit over 50%. And the Nasdaq is only up, I think, like 21%. So Bitcoin has outperformed the Nasdaq, twice as much as this year. Also Ethereum has outperformed the Nasdaq twice as much. We have two big catalysts, still I think playing out for crypto, which of course one is this Ethereum ETF being officially approved and launched, and then of course the other factor is the U.S. election. There's a lot of events coming on that side as well. We're getting the debate with Trump versus Biden. We're getting also the Republican nomination date in July. So everything. So a lot of stuff is still happening. So I wouldn't really give up here. But I mean, I'm really like excited as before, and yeah, so I'm looking forward to it.
What about the potential risks associated with the Ethereum spot ETF? Like, we always tell investors to do your own due diligence, do your own research. So what are some risks that they should be mindful of?
Yeah, of course, the concentration risk, that I was just saying in the previous question, right? The question is, or the answer is really, Bitcoin and Ethereum, how correlated are they? In a bull market, do you need to own one or should you own the other? And it really seems that both have been doing, quite well in this bull market. But when you look back, over the last sort of like 18 months, 24 months, Bitcoin has actually outperformed Ethereum, I think, by something like 40%. So the outperforming has been like, quite massive, because this bull market evolved, differently. It started differently. And I think for investors, it's really like to understand, and this is really the risk, I think, what narratives is really being driven right now. And of course, this is very different than in the previous bull market when Ethereum massively outperformed, because, as I was saying, it was really, very important to have Ethereum from a DeFi perspective, from an NFT minting perspective. This time, a lot of activity. Again, it's cheaper after the EIP 4844 upgrade that we've seen this year, but also because the activity moved to layer 2s and layer 3s, really, or it moved to Solana in the case of the meme coin issuance. So I think for investors, it's really to understand, the market structure, positioning. Is the market overextended? I think we could make actually an argument right now that futures are overextended in terms of where Ethereum should be trading, because, as I was saying, since May 20th, we saw 50% increase in open interest, which is of course a lot, and we have seen 20% increase in the price of Ethereum. So there is a big mismatch there. But of course, it can easily fill if these ETFs get approved and money really comes in the spot fund. But it's really, understanding events, understanding event risk, right? Positioning, market structure, and the narrative and the correlation. That's kind of the characteristics I would be looking at.
Thanks, Marcus, for your tips. Audience, take note of that. But just wanted to shout out that this is not financial advice, and it's purely for educational purposes. Yeah. And welcome, Luke. Hi. You managed to solve your technical difficulties.
Apologies, I had some difficulties with the internet connection. I'm here.
No worries. Glad that you were able to join us. Okay, maybe this next question could be for you. So, what strategies might short-term traders consider when the ETFs list?
I think what can be interesting, if you know a decision is coming, that you will position yourself for some volatility. So you can, of course, do that with options. If you have less experience, you can have strategies with structured products. It's more easy. You have structured products, for example, where you can say, hey, I will earn money when the price goes up or down. If it stays the same price, then you will lose money. But if you think, hey, there's volatility coming because it's a big moment, then you can trade, for example, a structured product where you will have profit and gain extra money from market volatility moments. I think that can be interesting. Also good for other moments, by the way, like the elections Marcus meant. It's just very good to be prepared on those kind of moments.
What about you, Marcus? What do you think are some short-term strategies?
Actually, I think Luke said something really, really important, right? It's really that the volatility is right now extremely low for such like a big event. And when you look at 30-day realized volatility, for Bitcoin, it's just, I think, like 26%, because I was just like, looking at this morning. And I think for Ethereum, it's a bit higher. It's sort of like just low 30s. But for both, the average 30-day realized volatility is more in the 60 to 70% range. So options are actually very, very low. And this kind of like reminded me of like literally almost like a year ago in July last year, I came out with 2 reports that people should sell all their Bitcoin, put 95% into high paying, treasury yield paying stable coins, and use this 5% to kind of like speculate, directional with the money. And it's like similar, I think, as Luke was offering, that they're like structured products you can really take advantage of. Because last year, at this time, we were kind of like bumping around 29,000, 30,000, but then we had a sell-off to 25,000. So you would have kind of protected yourself. And in an environment where really volatility is very, very low, it makes sense to kind of take advantage of it. And I think that's what people can really do in this environment. Of course, the other factor is, there's been a well-defined downtrend within the ETH BTC ratio over the last 2 years. It's really since the merge, September 2022 upgrade. Since then, actually, Ethereum has underperformed by around 40% during this time. But we are now at this upper level of this well-defined range, so we might actually get now a little bit pronounced breakout. So you can also just trade one versus another. So you could also theoretically express it through the ETFs once they're approved. But there are interesting components around it, right? Where you can probably sell a call on BTC and buy a call on Ethereum for almost like zero cost or other factors. So I think a lot can be done in this current market environment.
What about long-term strategies? What are some considerations for long-term investors? Marcus, would you like to just touch on that first?
Well, I mean, what is your definition of long term, right? So for crypto, long term probably means like 6 months or a year. But I think another important component that we haven't really discussed yet is that inflation is actually falling down, and inflation will actually result in the Fed cutting interest rates eventually, right? It's going to be like one time this year or twice, probably just like one time. But I think we have inflation around 3% now versus interest rates are 5%, and normally it's a little bit the other way around. So you can actually see that the Fed could cut by 200 basis points. So I think it's going to be very difficult to be not really bullish on crypto, because crypto is a long duration asset. Crypto really benefits from lower interest rates. And when we have seen this, for example, in the last cycle, just before COVID, there was also the year before COVID where the Fed kind of was really hiking aggressively, but then they had to cut aggressively, and then we had a massive bull market. And I think that's really still in the cards, and I think that's really going to help the whole crypto network, and anything that is higher beta, really, be it Ethereum in this case, or probably also Solana.
Thanks, Marcus. Maybe Luke, you can answer this. How do you anticipate the evolution of crypto ETFs will shape the regulatory landscape for cryptocurrencies globally?
So I guess it's very important to see what's happening also with the SEC, the governments. They are monitoring the ETFs very closely. Before listing, of course, they need approval, but also after the approval, because they don't like market manipulation. So it's always wise to check what's going on with the SEC, what they're saying about the ETFs. There's also big volatility, of course, big price swings. So it's always good to take notice of the underlying asset, but also what the SEC is doing, because they're on it. And they like ETFs to be regulated very, very, very good. And they don't want big impact because manipulation can happen. So for me, I guess it's important to look at the moments where before, just not one day before, but as much time as you have before to enter a trade for the ETF approval. And for longer term, I guess also the elections can be very interesting. So for me, it would be interesting to buy call options, for example, longer-term call options, out of the money, of course. And also before the high-impact moments, like maybe structured products, or I'm a big fan of doing a long straddle or strangle, so you can have a quick win for the volatility. Can all be done on crypto exchanges, or the most, of course, also at Bybit. So I guess those two are really important for me. So short term, it's straddle strangles for me. Long term, it's call options, also some perpetual trading. So I guess, yeah, what Marcus said, we have two really important big moments. Looking forward to this year. In my opinion, we will have a nice year, but yeah, let's see. Nobody knows, of course.
Yeah, thanks, Luke. All right, let's just, we've covered a lot today. Let's just look at some of the audience's questions. So this is your chance to ask us anything, your questions about Ethereum spot ETF. So someone actually asked, like, what are the top concerns or hopes from investors regarding the Ethereum spot ETF? Luke, do you want to go first?
I think the concerns will be that the SEC will involve too much. So they as I said, they will watch market manipulation. So they will watch the underlying assets, the crypto exchanges. So I think it's a good thing, by the way, because the crypto exchanges need to handle their platform well. It's more regulated nowadays, so it can be a good thing. But for some platforms, I guess it will be a problem. So yeah, it can be for some platforms concerning who don't have licenses in place or regulation or strict trading rules in place. So yeah, the SEC will monitor. So yeah, I guess that will be an important factor and a consideration. Also, one is important, I think, that when investors think, or when funds think it's interesting to launch new funds, then we need to be careful. I think in the traditional finance, you see also ETNs, it's exchange traded notes, and what they do is it's a kind of ETF. But the difference is they don't have the underlying, so they track the underlying, but they don't have the real underlying assets. It's better for tax reasons, this new product. It's also most of the time a little bit cheaper for the investor, but I think we have to be careful when new products will be launched that we are sure that the real assets, in this case Ethereum or Bitcoin, are in custody, and we are not. I think it's not good to trade the ETNs, the exchange traded notes, because there's no underlying assets. So I guess that's a little bit more risky. In my case, I would go for the ETF, or of course trade perpetuals then, because they track the underlying also. So I guess that's more easy for me.
Thanks. Do you agree, Marcus?
Yeah, you can also say that, fees and liquidity, right? That's sort of like what investors are looking at. There was, of course, or is concern, and we don't know it yet, how much the fees are going to be. Of course, we know that, for example, Grayscale is charging 1.5% for the Bitcoin ETF. And of course, if the fees are just too high, then we might not see a lot of inflows, because, people are going to make their rational decision, especially if both assets are, very correlated, right? If Bitcoin and Ethereum is very correlated, but let's say your fees are, 3% versus 1%, maybe say, well, I only want to stay with Bitcoin because the fees are cheaper. And of course, we know that the Bitcoin ETF issuers, most of them, the fees are really in the 10, 20 basis points only, really. So that's, I think, the concern. And of course, the concern is if there is enough liquidity in the Ethereum spot ETF. Of course, we know Bitcoin has the liquidity, but Bitcoin is also, a lot larger, and the ETF issuers had, of course, a lot more time to go around and talk to potential investors, to tell the narrative. And the narrative is a little bit easier for TradFi investors to understand about Bitcoin versus this kind of May 20th / May 23rd kind of like shotgun wedding almost. Is really they are forcing the ETF issuers to kind of quickly do the homework to get all the docs in line, while their marketing department need to quickly write the documents. What should we tell investors? And of course, the salespeople need to call investors, go around. So there might not be enough time really to line up a lot of big investors on day one. And I think that's kind of like one of the biggest concern really from the timing, because the Bitcoin ETF, it appeared relatively well flagged, so everybody was really having like couple of months really time to to drive up the marketing machine, which is not really the case for these Ethereum ETFs yet. And again, we don't even know the fee structure yet, so we also don't know if there's going to be another one round or another two rounds. So in terms of the timing, so I think timing is important, that we don't lose momentum here. So these are kind of all considerations, I think.
Thanks, Marcus. And like, do you think how will the network commission change in Ethereum spot ETFs? Like, do you think there will be a spike?
Well, I think what we have seen, of course, in the past, right, when there's a sell-off, either when there's a sell-off, we're seeing a big spike in in Wi fees or something, in gas fees, or when there's like a lot of demand, be it like some minting is happening or some other issuance. So I think this is going to be like more gradual. I think fees are really near the lows right now because a lot of the activities have moved on to layer 2 and 3. So fees is not really a concern here. And especially after the EIP 4844 upgrade in March, the Denken upgrade, it's really fees is not an issue. So I don't think fees is an issue at all here.
Thanks, Marcus. One more question. So do you think that the Ethereum spot ETF will be less speculative and more stable than assets such as gold, for example? Luke, maybe you want to start first.
Yeah, it's interesting. I guess in the beginning, so I traded gold a while ago. So I guess you see a big overlap because gold is an asset of trust, and I guess Bitcoin and Ethereum for a lot of people are the same. So you see some overlap. Also, the interesting thing is that when you looked at gold at 2004, I guess at the end of the year, they launched the gold ETF, and when you check the prices afterwards, the years after, you saw a big rise of 250%. So I guess you can say that there's a big comparison with gold and Ethereum Bitcoin. Now, of course, the Bitcoin and Ethereum are relatively new. So I guess there's a little bit more of volatility. But when we look at the past of the gold, we also see moments with volatility. We also see moments, by the way, with the big banks, of moments with manipulation. Banks had to pay fines for that. So I guess it's not a rare thing that we see volatility in Bitcoin, we see volatility in Ethereum. The same happened with gold. Still people trade it, still people believe in it. It's still around. A lot of people hold gold via ETFs or physical gold or trade it on a different way. So I guess you can say that Bitcoin and Ethereum are also very interesting. It has some more advantages over gold, I believe, because it's on chain. It's easier. You can use it very fast. With gold, it's harder. So I guess at the end of the story, that Bitcoin and Ethereum have way more advantages over gold. But yeah, I guess there's a lot of comparisons. So I don't think we need to worry. And at the end, it will maybe stabilize more. But yeah, like every asset, there will be price swings also in 10 years from now. I don't think that we will ever reach a moment where the Bitcoin stays, for example, 1 million and that's it. I don't think that will happen. But yeah, it's a good thing for investors, I guess.
Mm-hmm. And Marcus, do you have anything to add for this question?
I think when you look at the last 10 years, there were maybe 2 years when gold was interesting. And, the last kind of like 12 months is one of them. Maybe it's because of, the over indebtedness of the US government and other governments around the world. And, after all these stimulus packages. But I think, the message is really that, crypto and Bitcoin is never boring. So I really cannot see how Ethereum would be boring. There's always something happening. People were sort of like giving up like early last year, but then we had a massive bull market. So even like the bear markets, they don't really last that long. There's always some exciting stuff happening. So, I wouldn't really focus on gold. I would focus more on really, these crypto assets. I think it's more exciting, more stuff is happening, and it's never boring.
All right. Thank you to our panelists, Marcus and Luke, for sharing your insights on the Ethereum spot ETF. It's a pity that, Luke, you had some technical difficulties, but we're glad that you were still able to join us, even if it's for a short while. It's all right. Maybe we can have you on along with Marcus for another session. And of course, thank you to our audience for your lovely questions. We've explored the implications of the Ethereum spot ETF, from its regulatory journey to its impact on the market and strategic considerations for investors. Of course, please note that none of this mentioned today is meant to be financial advice, and everything discussed is actually just for educational purposes. All right, thank you once again to our panelists and to you, our audience, for tuning in to today's insightful discussion on Ethereum spot ETFs. For more information, please visit our Bybit Learn website, and don't forget to connect with all of us on social media. We also have some exciting new projects that are coming up on Bybit, so definitely stay tuned for that. Let us know what are some topics that you would like to hear more of, and we'll see you at our next live stream. Don't forget to complete the pop quiz if you want to stand a chance to win a share of the 75,000 BOME prize pool. So yeah, keep a lookout on our social media platform for updates. And thanks again. See you soon. Bye-bye.
All right.